7:32, 28 moving up to 7 o'clock, coming at 8 o'clock, 7:28 moving up to 8 o'clock. Welcome back to First Step. With this segment, we welcome our friends who visit us every fortnight, every 2 weeks from the Unit Trust Corporation. This week, we're focusing on university education funding. And yes, we do have GATE in Trinidad and Tobago, but there are a lot of other costs associated with university funding, and also not everyone is going to want to study in Trinidad and Tobago, or not all the courses are covered by GATE tuition, so there's some planning that you have to do. Our guests, sales manager with the UTC, Omar, and we want to welcome for the first time Senior Financial Advisor, Tennille. Good morning, Tennille, welcome.
Morning.
Thank you for joining us this morning.
Good morning, Paul. Thanks for having us here.
Well, we always like to have you because you always give us good advice.
Yes.
Keep the brain churning in terms of what you need to be planning for. Let's start. We're talking about university education funding, and people don't realize that most people, that basically the proactive thing to do is, even before you conceive, start thinking about this child's university funding, because it's not like 20 years ago where it's an option now. A first degree is not an option. Most people are now moving toward having a master's in Trinidad and Tobago. We're fortunate in this country, which means to be competitive, you really have to start thinking about your child's education at that level, wouldn't you?
Yes, exactly. And what we advise our clients is to start planning very early. Right? And you really have to have a plan. And the first step in the plan is really knowing what's the cost attached. Right? So if you think you want to send your child to a specific program, you need to find out what's the cost attached to that. And this information is readily available online, right? And you can then figure out how much years the program is, so you really get a total cost, as well as the other costs involved there, college fees, as well as accommodation, all these other things.
There are a lot of incidental costs, even if GATE applies to that course, and not GATE doesn't apply to every course. Omar, when should we start actually saving and investing in, and what are the options in terms of instruments available, even at the earlier stage, at the teenage stage, etc.?
Correct. As early as possible. Paul is exactly right. Between diapers to diploma, you really only have about 18 years to go. When you think about it, 18 years may sound like a long time, but you're saving from each of the paychecks you get during that 18 years. So if you think about it, 18 years, you get a paycheck every month. 18 by 12 is 216 paychecks. If you start to save when the child is 8, you only have 10 years to go. 10 by 12, 120. Child is 13, only have 5 years to go. That means 60 paychecks left, so as early as possible.
Which means it's an easier buffer when you start earlier, because there are other expenses that you also have to put aside for your mortgage, your car, incidentals, groceries, etc. So the earlier you start to invest, the easier it is for you down the road.
Correct. And get other people involved. I mean, a child that is 1, 2 years old, they don't know the difference between a toy. Most children, you give them a very expensive toy, they end up playing with the box. So let the godparents, grandparents put money into that same account. So more will start to grow, and you have that time that will help the money grow, because as you said, it's a lot.
Tennille, you spoke a while ago about understanding what the costs are.
Yes.
We all know, going to university, the cost increases every year.
Yes.
If you start with a ballpark figure now, 18 years down the road, it is going to be significantly different.
Yes.
How do you come to that figure? And what percentage of your earnings should you put aside in the context of 18 years or 216 paychecks down the road?
Okay, Paul. Given the fact that tuition costs are rising higher than the rate of inflation, we recommend that once you know the costs attached, you look at your savings and really assess what you can contribute to really achieve this goal. But you also need to find investments that are geared towards equities, so that you'll be able to really get the growth that is necessary to make this goal achievable. We have 2 products that we recommend to really achieve this goal. We have the Children's Investment Starter Plan, the CISP as we call it, and we have the Student Investment and Protection Plan. And these products are heavily weighted in equities, so you really get that opportunity to get your money to grow.
For novices among us, just explain loaded in equities. What does that mean specifically in terms of the products themselves?
Well, our products are invested basically in the local stock market, as well as the regional stock market and the international stock market. So we buy companies in these regions, and this helps give us the growth that is necessary, meaning that the money is growing and compounding, so that it's not just what you put in, but you also get some income from that and some capital appreciation.
In terms of the Children Investment Starter Fund, is this the one you start from very early?
Well, both of them you can start,
very early. What are the options? And in terms of flexibility, what does each of them offer you? Because we also know that the products offer a level of flexibility, access at different points, and you can set these points down the road, giving yourself some options as the time traverses.
Right. Well, the both plans, they offer easy access as well as safety, growth and income. The Student Investment Protection Plan, however, has an insurance rider attached to it, so the children have an opportunity for an insurance product with it. And the both products we recommend because they both have features and benefits that would be beneficial for achieving this goal.
Omar, in terms of contingency plans, usually it's not one child you're saving for in most cases.
I know it's
more than one child you're saving for, and these children will fall and break a leg.
Yes.
They will need lessons along the way.
Correct.
They will need vacations. How do you balance all of that? Sometimes it seems overwhelming to people who are starting to work toward all their goals, including especially their children, which in most people's estimation are their most significant investments.
Paul, that's an excellent question. That's where your UTC financial advisor comes in, because we help you look at your financial big picture. There's a lot going on in life, and you have to keep tabs on everything that's going on. We would also recommend that when you come to your financial advisor, we're going to help you look at where you are, where you want to be, and how to get there. When it comes to children's education, one of the biggest downfalls we see is people relying on debt or loans. We want that to be the last option. So you start saving as early as possible. We can help you with the options. So, for example, most people would shoot for the Ivy Leagues. That's all well and good, and keep that goal in mind. But there are other options. There may be smaller schools that are less expensive.
And you have to be practical. You have to know what you can afford.
Correct, exactly. And then also, too, if your child does well enough at the CXC level, A levels, and they get into an Ivy League school, then that school should pay because your child has worked hard.
But that doesn't mean you shouldn't prepare.
That does not mean that you shouldn't prepare, correct. Because, as you said, there are incidentals. There's cost of books and room and board and all these things. Also, there is no scholarship for retirement, Paul. So keep that focus. We've seen a lot of examples of people wiping out their retirement savings to fund their children's education. There's no scholarship for retirement. I repeat, there's no scholarship for retirement. So keep the focus, and you have to start saving for all those things in addition to saving for your children.
Tennille, how do you talk to people to let them know that, yes, we have GATE in Trinidad and Tobago, but GATE should not be an indicator that you should not be investing in your child's future? Because you say, well, we worry about that for we have GATE. We're lucky in Trinidad and Tobago. GATE may not be here forever. It may not be the course covering the course you want. How do you get that message across? And even if your child is fortunate to get their course of study covered by GATE, it's still important to have a backup plan.
Yes, exactly, Paul. What we have been seeing recently is, although GATE has moved from funding half of the college education to now funding the full college education.
In the first degree?
Right. We have seen that rental accommodation has gone up significantly. So before, when you were probably paying $2,000 per month, now you're paying $6,000 per month. And parents are really thrown off by that. So if you had planned from before, even though you have GATE, you have a buffer in case anything else goes up, right? So we'd recommend, just from that example, that you really start early. So at least you have something, because you may have a child that doesn't want to go to college, but they may be an entrepreneur, and you can use this money now to give them a start.
Yeah. And Omar, in terms of actually looking, when you started, let's say, at conception or birth, how much should you reevaluate your investment? How often down the road, say 5 years, 10 years, when the child is 15, based on what's happening in your environment and in the global situation? Is that also one of the bits of advice that you give people? Because things change, circumstances change.
We recommend an annual financial review, or shorter if a major life event happens. If you change jobs, if another child comes along, if you move house. Each time a major financial event happens, you have to reevaluate to see where you are, where you want to be, and how we can help you get.
Is there a different approach for children studying locally, regionally, or abroad? Or does it always depend on the cost factor involved?
It always depends on the cost factors. Tennille said, start with that plan, find out the total cost, and then move to...
Because I'm presuming someone traveling abroad or regionally, you have to factor in airline tickets.
Correct.
So they are ground transportation, different kind of accommodation. It's totally different abroad to home.
Exactly. And to help you with all these numbers on our website at www.ttutc.com/advisory services, we have a college planning calculator to help input all those costs, and it will give you how much you need to save.
Seems to have a calculator for everything.
Yes.
It's always available for free online. Tennille and Omar, thank you for being with us.
Thank you very much.
Once again, ttutc.com is the website, and the number is
624-8648.
624-8648. Once again, start planning now. 1, 2, 3 children, you have to plan, whether there's a gate or not, to make sure that you provide them with the foot up they need, as they say. Education is not an option anymore. It is one of the tools they need to get by. Thank you once again for being with us.
Thank you.
We will take a short break and come back with our final segment. This is First Up on CTV.